All right, guys, so now we do have everything that is necessary to start the backtesting process. You understand the rules involved with the pullback strategy, the stop placement, target placement, and now you also have a spreadsheet capable of doing all of these calculations for you that are necessary in order to figure out your risk management, money management plan, and whether or not you'd like to use any strategy going forward. So let's go ahead and do the backtesting process together. We're going to test the pullback strategy together throughout the full year of 2018, or at least up to this point in 2018. It's currently May of 2018. And I'm going to be doing this to show you guys exactly how to backtest this strategy. Also, I'll be able to point out some of the key things you need to look out for in the backtesting process as well. So let's go ahead and jump to a chart of the Canada Swiss. I'll pull that over. And as stated in the previous videos, the best way to test, if we were going to be testing this section here, we would not want to be looking at the chart like this. The best way to test a strategy is to do so from left to right. Now, if you have a different charting platform that doesn't offer market replay, then doing it like this with either your arrow keys, just pushing the market forward, or dragging slowly to find your trades is going to be your best bet. But if you do have the opportunity or the resources to use market replay as the one here on TradingView, the platform I'm using has, then what you can do is just place that market replay right at the beginning of 2018 as we just did. And this is going to make our backtesting process seem a lot more realistic. This is not going to give us any data looking right. So with that being the case, now we are capable of backtesting in what would really look like real-time trading. So let's go ahead and slow down the speed of this backtest just a little bit, and we'll click the play button, guys. As soon as we click the play button, we're going to be looking for our pullback strategy entry. So let's go ahead and do that, and I'll be sharing with you guys every time we get a trade. Now, this process could take a while. This may be a pretty long video, but I want to make sure everyone comprehends exactly how to backtest this pullback strategy. So let's go ahead and begin. Clicking the play button now. As you can see, the market's moving forward, and we can actually speed that up until I see an entry. When I see an entry, I'll go ahead and pause the video. All right, just saw an entry. Wish I would have left it slow. I'll go ahead and slow it back down for next time, but here is our entry. Let's pretend we can't see anything to the right of that. Right here is our first pullback entry. What we'll do is go ahead and place our position tool on the chart, hopefully without being able to see anything to the right. As you just saw, though, we did speed that up a little bit too much, and we were able to see that this trade was in fact a winning trade. But what you would do is go ahead and set up your position tool at the close of that candle, which is our entry candle. And why is that an entry candle, guys? It's because it meets all of our rules, right? We have a new structure high, a pullback of more than 2 candles, and a swing low that's an engulfing candle, giving us our entry. That's all we need in order to enter the market. So now that we're in the market, we need to hover over that candle to find out our stop loss, right? Our stop loss, remember, is going to be based on ATR up here to the top left-hand side of your screen. So once we hover over that candle, we'll be looking over there. That is a 24 pip ATR, meaning we're going to have a 20 pip stop loss. So we go to the bottom of that swing low. That gives us 21 pips, plus 20 pips is going to be 41 pip stop. And for the purpose of this strategy and in the transition phase, we're looking for a 1-to-1 risk reward. So we'll go 41 pips on the target as well. And if we scroll the chart to the right, you can see that that target was in fact hit. Now that we know that target was hit, we can pause the replay system as we've already done. With our 41 pip target, we can go ahead and head back over to our spreadsheet. The pair we're trading right now is the Canada Swiss. We can go back to the chart, look up the time for that trade. That trade closed at 1700, which is 5 o'clock p.m. So we just type that into our spreadsheet as 1700. It works in military time. The date of that trade, go over yet again. And I'm normally doing this with 2 separate monitors, which makes this process a lot faster. But if you don't have 2 separate monitors, you will just have to switch back and forth. This trade was placed on 1/7, which is 2018, January the 7th. So we'll go back over and we'll do 1/7/2018. Our stop loss we know was 41 pips. Our target was a win of 41 pips. And that's how we would go ahead and plug these numbers in after looking at the trade on the chart. We'll do this for every trade. We'll go ahead and put in this pair because we know that this is the pair we're going to be trading, is the Canada Swiss. So we'll just paste that in so we don't have to do that every time. And I may not come back over to the spreadsheet every single trade. What I'll probably go ahead and do is mark off a bunch of trades on my chart. That's how I actually backtest, is I mark them off with red and green arrows depending on if I think they won or lost. And then I go back and check whether or not, double check whether or not they won or lost, and then come over to the spreadsheet and plug them in. So that's what I'll do for the rest of the video. I just wanted to go ahead and show you guys how to plug these numbers in on the spreadsheet really quickly. We may do one more trade like this, and then we'll continue just looking at the chart and come back and plug the numbers in afterwards. So let's go ahead and head back over to the chart for the Canada Swiss. And now we know we've already hit our targets for this trade. We're looking for our next opportunity. We'll hit the play button. We'll just sit here and continuously watch this. Every time we see an engulfing candle, we'll go ahead and pause it, just so I can give you guys an indication of whether or not it's a winning trade or whether or not it's a valid pullback entry. Would this be a valid pullback entry? We have a new high. The market just broke into. We have more than a 2 candle pullback, but is this one of our advanced entry reasons for the pullback strategy? The answer to that's no. This is not a swing low, because our swing low was right here on this first candle, and this is also not a 1, 2, 3 engulfing candle. This would have to be a lower swing low for that to be the case. So that's not a valid entry here for the pullback strategy. We'll continue looking. We'll go ahead and hit that play button. And now we're just waiting to see if we find an entry. Was that an entry? Go ahead and pause the video here. Looks like we would have won this trade if it is a valid entry, but go ahead and tell me whether or not you think this would be a valid entry. The candle we're looking at is right there, that engulfing candle. Well, we have a push down into a brand new low, breaking into a new low. We have more than a 2 candle pullback. We have a 1, 2, 3, then an engulfing candle, meeting our advanced engulfing entry rules. So that in fact would be a win. We'll grab our short position tool, place it on the chart, shrink it up. It does come way larger than it should be. I'm not really sure why. We will hover over that candle to find our stop loss. Remember, we're looking in the top left at the ATR. That ATR of this candle is 26 pips, meaning that we're looking at a 20 pip stop loss. So we'll drag our stop loss position tool down to the swing high, which is 8 pips plus 20 would be a 28 pip stop. Putting our target tool on now at 28 pips. As you can see, this was by far a winning trade. So what we do, we'll go ahead and plug this into the spreadsheet one more time, and then we'll just go through the rest of the chart with green and red arrows and then plug in the rest of the numbers later on. But we'll go ahead and plug in one more to make sure you're aware of this. And what we can actually do is go ahead and hover over the candle. So we know that this trade was placed on 111 at 2100 in 2018. Head over to the spreadsheet, 2100, 111. The stop loss of this trade was 28 pips. The win was 28 pips. So as you can see, you can do this process pretty quickly. Let's go ahead and go back over to the chart, and now we'll just go through and look at trades with red and green arrows before we plug the rest of the numbers in here on the spreadsheet. So we'll click the play button, and we'll just watch this market data throughout the rest of 2018, trying to find our pullback entries. All right, pausing the video here. Was this a valid entry? It would not have won or lost yet, so that's a good thing. Now we have the opportunity just to check this trade out before seeing if it won or lost. We have a push down with an impulsive move that breaks into new lows. We have a pullback of more than 2 candles. Do we have an advanced engulfing entry? Well, yes, we do. This engulfing entry is a swing high entry. So we would place a stop. We would place our entry at the close of that 4-hour candle. Our stop loss would go above it. Our target would be down here at some point. We'll go ahead and hit the play button and see if this market makes it down there to that level. Yes, we did right here, the wick of this candle. So what I'm going to do, and what I normally do in my own backtesting, is I will mark this with a green arrow because I assume it's a winning trade. Now, this doesn't mean that I'm going to plug it in as a winning trade automatically in my spreadsheet. I'm going to go back and double check all of these with my position tool or with a ruler tool to make sure they're wins, but this just speeds up the process for me. So that's what I'm going to continue to do here for the rest of this backtest. Here we have another engulfing candle. Was this a valid entry? Hopefully you were capable of saying no to that question, because this, while in fact did create a new low and have more than a 2 candle pullback, this is not our advanced engulfing entry. This entry did not come after a swing high or as a swing high. So this was in fact not an entry or a valid entry for the pullback strategy. Continuing on, hitting the play button now, and just waiting for this market to give us any kind of opportunity based on this pullback strategy. Was this an opportunity? The answer to that question is no. Hopefully you can tell why. It's because this is not a swing high engulfing candle. Here was our swing high. And it also is not a 1, 2, 3 move. In order for a 1, 2, 3 move to be valid, this wick would have to be over the previous wick. The engulfing candle would have to be lower than the previous candle, and that would give us our 1, 2, 3 engulfing move, which did not happen either. So invalid trade there. No way for us to enter the market based on the pullback strategy. Still waiting, still waiting. Is that a valid entry? Here, the answer to that's no. I'm not going to go through that. I'm sure you can figure out why yourself. We'll pause it for a few seconds and just look. As you can see, it's not a 1, 2, 3 entry, nor is it a swing high engulfing candle, so that would not be a valid entry. We'll continue looking. Same with this candle, would not be a valid entry because it's not a swing high, nor is it a, well, wait, let's pause the market, nor is it a swing, it's not a swing high, nor is it a 1, 2, 3 engulfing move. Now here, what do we have? This market pulls up to a new swing high, right? This swing high is higher than the previous swing high, so that makes this our new swing high. Now that we have our new swing high followed by an engulfing candle, is that a valid entry? Yes, it is. That would be a valid pullback entry. We're still under the 50 EMA. We have this 1, 2, 3 engulfing pattern entry. So we would place an entry here. We'd place a stop loss above this, and our target would be somewhere down in this area around 0.751. Let's see if that gets hit at 0.751. Market pushing down. Yes, right here is 0.751, so I would assume this is a winning trade. Again, I will go back and double check to make sure, but this looks as though it will be a winning trade for the pullback strategy. Place my green arrow on the screen and continue looking. Was this a valid entry? The answer to that's no. It's not a swing high, plus it was not a 1, 2, 3 engulfing move. Was this a valid entry? The answer to that, of course, is yes. Let's go ahead and see about why. We have this new push down impulsive leg, way more than 2 candles coming up towards our 50 EMA. We don't quite touch our 50 EMA, so this would be an entry reason number 1, but we do get a 1, 2, 3 engulfing move right here, meaning that we would open a position at the close of that candle, stop loss above there, target right down here in the 0.744 area. Let's see if that gets hit. 0.744 is what we're looking for before we get stopped out, and yes, that was a winning trade. We'll go ahead and place a green arrow on the screen so that we know that's a winning trade. Clicking the play button now, and we have another entry. Would this be an entry? We have a push down, push up, a new swing low created by this candle, and then we have a swing high that is also an engulfing candle. So the answer to that question is yes, it would be a valid entry for the pullback strategy. Let's go ahead and click play and see if that trade would have won. Again, our entry would be the close of the candle, our stop loss would be above the swing high of the candle, and our target would be somewhere around 0.735 right down here in this area. Click the play button, see if that ended up winning. And yes, I would say that is a winning trade. I will go ahead and place my arrow on there, and I will double check that later on. Here we have a new swing low created, so now we're waiting for our entry reason to be met. Do we get that entry reason? We have our new swing low, our pullback of more than 2 candles, a swing high engulfing candle right here. So yes, we would open a position right there, stop loss above here, target down here around 0.734. Let's see if that trade ends up hitting targets or stopping us out. And finally, it looks like we were more than likely stopped out on this trade. We'll hover over it to see that's 23 pips. We'll take our ruler tool out. We're hovering over now the wick of that candle, the high. We're looking at a 20 pip stop loss. And actually we were about 2 or 3 pips away from being stopped out, so we're not stopped out yet. Let's continue to see if this market goes up or down from here. And we ended up pushing down, making this another winning trade. And again, we'll go back and double check that to make sure, but that looks as though it's going to end up being a winning trade. We've made a new low. We're now looking for another entry. Not getting anything so far. Continuing to wait, just watching the market here. And is this a valid entry? It's a swing high engulfing candle, right? We have a swing high here, and we have an engulfing candle. Well, because this swing high here is in fact higher than this previous swing high, then this would be a valid entry. We're also not breaking below our bodies of the candles over here, so that would make this a valid pullback entry. And again, we'll go ahead and put a green arrow there, and let's continue to look for our entries. Now, this may be something common that we see is a 2 candle pullback and an engulfing candle. Is this a valid entry here? The answer to that is no, and the reason is because our bodies of these swing low candles cannot be broken and closed below in order for this to be a valid pullback entry. So we will just continue to look here for entries based on the pullback strategy. And here we have our first 2 losses. Here we have a pullback entry that is valid, yet lost. We'll go ahead and mark that with a red arrow. And remember guys, we're not waiting for another entry. We can't take this entry even though we're already out of this trade because we haven't touched the 50 EMA yet. We have to touch that 50 EMA to give us another valid trade for entry number 2. Well, we do get the touch of that right here. And we actually get more than one close above the 50 EMA. I didn't realize that until just now. So here's a close above the 50 EMA and here's a close above the 50 EMA. Since we got 2 closes above the 50 EMA, that makes this trade invalid right here. We can only have 1 close above that 50 EMA to have a valid pullback entry. So this would not be a valid trade, therefore would not be a loss. Now we'll just continue looking for our entry here on the Canada Swiss. All right, let's zoom into this market right in here. Is this a valid entry? Answer that question is yes. We have a push up breaking above any highs we had looking left. We have a pullback of way more than 2 candles. We have a 1, 2, 3 engulfing pattern entry. So our entry would be here. Our stop loss would be down here somewhere. Our target right up here. Let's see if that ends up working out by clicking the play button. And no, that would end up being a losing trade. We'll go ahead and place a red arrow there for losing that trade. And we'll continue to look for these trades here on the Canada Swiss. And guys, we're already at March the 13th, so we're going to continue to do this all the way through May the 19th, which is today's current date. I know this video is getting a little long, probably a little drug out, but again, I want to make sure you have a full comprehension of how to backtest this. I want to make sure we go through some of the common instances where the trade would or would not be valid, so you have a very good idea of how to actually backtest the pullback strategy. So let's just continue here. I know it's getting drawn out, but we're going to continue to look for trades based on this strategy. There's our new low. We're now looking for a pullback and an entry. That entry closed below those bodies, so that would not be valid. And now we're back above the 50 EMA looking for an entry. And now, is this an entry? The answer to that is no. We have more than a 2 candle pullback. Yes, we have new highs coming in right here, but this is not our 1, 2, 3 engulfing pattern, nor is this candle a swing low. So that would not be valid. Let's continue looking. Now, is this a valid entry? We come up, we break into new highs right here. We pull down by more than 2 candles. We have our 1, 2, 3 advanced engulfing entry right here. We would have a entry here, stop down here, target probably somewhere around 0.743. Let's see if that gets hit by clicking the play button. And there we go, guys. That looks to be what would have hit targets. We'll go ahead and click our arrow key, get a green arrow for this trade, signaling a win, and we'll start looking for our next entry based on this pullback strategy. Still continue to look here, guys. This would not be an entry because our swing low's here, and this is not a 1, 2, 3. The middle candle would have to have a lower swing low, so we're still continuing to look for an entry based on the pullback strategy here on the Canada Swiss. Not getting anything yet, and there we have one. Okay, why is this an entry? Well, we have this market breaking into new highs, pulling back by more than 2 candles, and this is a swing low engulfing candle that does not break above the bodies of the previous high, that stays above the 50 EMA. I know that's a mouthful of rules, but if you have them written down, you should be able to spot this pretty easily, and you should be able to confirm that this is an entry by the rules you have written down beside you, hopefully at this point. Our entry would be the close of that candle, our stop loss would be right down here, and our target would be much higher. We'll see where this market goes to see whether or not we need to be placing this as a win or loss. Somewhere around 0.762 will probably be our target. So let's go ahead and click the button here to play the market and see what we get. Looking for that 0.762 just got clipped. So we'll go ahead and put a win there. And we'll continue looking for entries based on the pullback strategy. There's another entry right here. So we entered the market there. That is a 20 pip stop loss. We'll look with our ruler tool, pushing down. 20 pips would not have been stopped out yet. So what we have is a valid entry. Market pushing up, pulling back by 2 candles. 1, 2, 3 advanced engulfing entry right here. Entry at that candle. Stop loss below the swing low by 20 pips was right down here. And 0.768 in that area will be our target. So let's go ahead and hit play and see if we hit that 0.768 target. And the answer to that is yes, we did. So let's go ahead and grab a green arrow, mark that as a win, and continue looking for these entries based on our pullback strategy. All right, guys, so now we're looking for a bullish pullback strategy. Waiting on this market, there we go, right there. Waiting on this market to pull down by 2 candles and give us an advanced engulfing. Is this an advanced engulfing after a pullback of 2 candles? Yes, it is. Does it close above the bodies of the high? No, it does not. Is it a swing low engulfing? That's the advanced engulfing? Yes, it is. So we would enter the market there, still above the 50 EMA. We'd put a stop loss right down here, and our target would probably be around 0.772. Go ahead and click the play button, see if that ends up winning. And yes, it does. We'll go ahead and grab our arrow tool, mark that as a win, and continue looking. Now, would this be an entry? Right here, the answer to that is yes. If we look at the close of this high, or the high of the body of this high, right here, we'll go ahead and put a horizontal line there, and we will zoom in so we can see this a little better. You can see that our entry candle closed below that. So what we would have is an entry there, a stop loss down here, depending on the ATR, and we'll actually check that really quickly to see if this was a win or a loss. ATR is 18. We would do a 20 pip stop. On a 4-hour chart, 20 pips is going to be the least amount we're going to use as a stop. So if we go down 20, you can see that we're well away from actually being stopped out by that candle, and the market has now pushed up to hit what probably would have been our targets. We'll mark this off with a green arrow, and we'll click the play button to continue looking for trades based on our pullback strategy. Now, the market heading lower, we can't really look for any kind of entry yet. Heading back up above the 50, looking for a bullish entry now. Not getting anything until now we've broken below the 50. Back above, now looking again for a bullish entry. Nothing so far, breaking below, looking for a bearish entry. Oh, well, at this point, we're actually at present time. So as you can see here on the Canada Swiss, at present date, we're looking for some bearish entries. What we'd be waiting on is this market to pull back by over 2 candles, not close above the 50 EMA more than once, then give us our advanced engulfing entry based on our rules for the pullback strategy. So that was a back test of the Canada Swiss. I know it was probably long and drawn out, but at this point, hopefully you have everything you need in order to back test the strategy on the chart. You have all the knowledge and information necessary in order to successfully back test this and do it correctly. Now, what we're going to do, and I'll do this on my own and then bring you guys over to the spreadsheet. I'm actually going to double check all of these trades, and then I will plug them into the spreadsheet for you. As you can see, during 2018, the Canada Swiss has proven to be extremely profitable for us using this strategy. This is actually our most profitable pair for 2018. That's why I wanted to start with it. The Aussie dollar did pretty well too. We're going to test that together as well, just to make sure you guys fully comprehend everything. But here, just looking at our arrows, you can see we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 wins and only 2 losses throughout 2018 using the very specific rules we use to trade the pullback strategy. So I'll go ahead and plug all these numbers into the spreadsheet and let you guys take a look at that. I'll see you over on the spreadsheet. Okay, traders, now here we are back over here on the Canada Swiss spreadsheet where we've recorded the 15 trades we've had so far on the Canada Swiss. As you can see, throughout these 15 trades, we had an average pip win of 49.77, an average pip loss of 47.13, giving us a 1.06 average risk to reward. We ended up with 587 pips so far in 2018 using this strategy on this pair. Total trades was 15, 13 of those were wins, only 2 losses, giving us an excellent winning percentage of 86.6%. Now, do not let that get you extremely excited. I mean, it is exciting, don't get me wrong, but the fact of the matter is the reason we have different pairs in our portfolio is because at times like this, when the Canada Swiss is doing extremely well, winning at 86% of the time, there are other pairs in our portfolio that are losing, that are winning less than 50% of the time. That's the reason it's so important to optimize your trading strategy and optimize your portfolio so that you have pairs like this throughout times that other pairs are not trading well. In 2018, we've had some pairs that are trading poorly, winning it right around 50%, which of course is keeping us about break even on those pairs. And then we have some that are trading extremely well, like the Canada Swiss. We'll go over more about this in the optimizing section. I'm gonna teach you guys how to optimize for the best pairs in your portfolio, but just keep in mind that this 86% is too small of a sample size. If you remember from the quarter example, we need to flip this coin 1,000 times, not 15 times, in order to get an accurate description of how this may perform in the future. So this is not a back test, guys. This was just an example of how to back test, and this pair, this strategy on this pair does not always perform at 86%. You have to go through and test this for yourself over hundreds, if not thousands of trades, depending on what you need in order to be confident in the strategy. So Here on the Canada Swiss though, in 2018, as you saw, we just went through with our rules-based system and had a winning percentage of 86%. Based on a $10,000 account and risking 2%, that is a $2,423 gain, or 24.24%, with a 3.96% max drawdown. So that's the information we've been able to record in the spreadsheet based on our backtesting results for the year of 2018 up through May, which is the current month we're in. Now what we're going to do is head over to the Aussie dollar, and I'm actually going to test that, plug that in for you guys as well in the next video, and we'll come back to the spreadsheet after all that is finished. So I'll see you guys in the Aussie dollar backtesting video.